Hi, sorry if you hear the fan noise. Today we're gonna be going over, and this is can be applied to any type of concept, but I'm mostly gonna be focused more towards ICT concepts, how to frame a trade setup right, and how to know, okay, this is your trade setup, what to take, when to exit, when to enter. We're gonna be going over all of that. So without wasting any of your time, I'm gonna get straight into the video first. Some of the most important parts, right? Have your trading plan laid out. Have your trading plan laid out. What you want to see. Do you want to see a sweep of liquidity? Then you break structure, and then after that, you take the fair value gap that just got formed. Something like that. You have to follow that plan, and you have to know the parameters for your plan. So having your plan laid out, right? Knowing each and every single parameter of your plan is probably the most important part, because all you're doing is trading your plan. You should know that your plan works because you back tested it, and then after that, going. All right. Identifying high slash low probability conditions. Now you might say, how does this have to do with framing a trade setup? Identifying low or high probability conditions is price ranging. Are we in a tight range? Has any liquidity been swept? Have we reached equilibrium? Is there inefficiency that has to be filled? Is all of these met? Has our drawn liquidity been met? If these are things that you have to consider, high and low probability conditions for your specific setup, right? If the drawn liquidity has been met and we start to range, this is low probability conditions. In this point, you're gambling, and you should not frame your trade setup. But if you're framing your trade setup on, okay, we left the inefficiency here, we've had a tight range, I want to now buy us sweeping this liquidity right here, and there's an inefficiency to the left of us, so we can rebalance now to equilibrium of this price leg. You're framing your trade setup, and then you're playing your entry model. Now, specifically, within this leg, you need to have two things. You need to have entry level and validation level. When you're framing your trade setup, if you don't have any of these two things, then you're not trading correctly. If I want to enter here, my validation level is going to be right here, and I'm going to manage my risk to the appropriate size so that if I know this high gets taken out, or if I know we go to this area, I'm likely on the wrong side of the market. If I were to even reset the chart view, right? Let's say, okay, we take this, we range. If we go, we sweep, my invalidation level is right here, and I'm thinking it goes down. You see how you get stopped out here, and you don't have to get this bulk of the move going all the way in this drawdown, because you notice, okay, I'm on the wrong side of the market if this wasn't the true sweep. We go, what happens? We sweep it. You need to have an invalidation level, right? If this is your invalidation level and you want it to just rebalance this inefficiency, you buy some sort of level over here, all the way up to here. This is your invalidation level. It never gets touched until this inefficiency is filled, and then continues lower. So that's why that is extremely important to have, right? And then framing your trade setup, you need to know high probability days. I will not stress this enough. The daily profile and the weekly profile, if you are a unprofitable trader, will help tremendously, because then you're identifying high probability conditions, and you're identifying, has the draw liquidity been met? Do we have news? When are we going to accumulate? When are we going to manipulate? When are we going to distribute, right? And then you frame your trade setup around this. Okay, if I know we have news at 8:30, right? If I know we're in a tight range, we have news at 8:30, a key time for us to manipulate, and then we start to show signs of bullish displacement, especially respecting these lows that we now just took, you can start to frame any type of trade setup around 8:30, knowing that you're manipulating, knowing that your bias is lower, knowing that you have resting stops below, knowing that there's resting liquidity below, knowing that we have to rebalance into equilibrium, knowing we have to rebalance at inefficiency, You can play this simply off of that and frame your trade setup. When you're framing your trade setup, you want to know what's your entry, what's your exit, what exactly you're looking for in terms of, are you trying to rebalance inefficiency? Are you bullish? Are you bearish? What's your daily profile looking like? Then your entry level and your invalidation level. You can say your entry levels right here, and we make a short-term entry, invalidation level, where price now just created a respected high right within here. We continue to trade down. We sweep this here. This price shouldn't return to here because at this point this is all balanced price action, and we know if price takes this high, it's most likely going to take this high. So you enter here with your stop here, and you catch the second leg down. That's another idea of framing a trade setup. When you're framing your trade setup, it can't be two-sided. I can't stress this enough. It can't be two-sided. You should know, okay, the market should go this way. I'm going to have my entry when price does this or anything similar to this. I'm going to take my A plus setup after price has reached this certain requirements, aligning with my daily profile, aligning with the bias of the market. Then I'm going to have my invalidation level when I'm wrong. I'm going to manage risk properly, and whenever I see my setup present itself, no matter how ugly it looks, I'm taking it, and you're going to take it emotionless. This is how you frame your trade setup. It's really simple and easy once you start to get to it, right? Let's say, for instance, price, this is a respected high, price comes, sweeps this, we're expecting lower to here, and we're expecting lower to here. How did I frame my trade setup? Okay, now we're rebalancing to equilibrium, we're hitting a PD array, right? We probably had an SMT between these highs. Once we try to sweep this, price shouldn't come back to here. Once we displace lower, okay, maybe I want to enter off the order block. We get a perfect order block entry right here. 1, 2, tap, going lower. Now we can aim for this, we can aim for this, and our final target could be to here. Now, framing your trade setup, another important thing is partials. When should I partial? Partial, take profits, completely up to you in the end of the day. But if my risk is here, my risk to reward is always going to be at least a 1 to 3. After that, it depends on how confident my drawn liquidity is. Like, let's say this is a data low, or an important low, or a low that formed during a time of key manipulation. That's where I'm going to place my final target as, because price can only need this before reversing, right? If I have a bearish bias from here to this important low right here, this intermediate term low, this is where price is most likely to react off of. Why? Because it's an important low. If this continues to hold price, I could potentially be wrong. So even from here to here, if you want, you could partial towards the equilibrium of that, of your entry to that. But I personally am holding from A to B. This would be my first. It's an abnormal wick. Abnormal wick. Intermediate term low, right? Learned that in ICT's 2022 mentorship. This, if it continues to hold price and we were bullish, you can see that, look at how it held price here before continuing to go lower. Then, what would I do? Relative equal lows here, right? You could trail your stop. Putting it at lows that should hold price or should be taken. If this was a data low, my final target. This is A to B, then you have your C and D. Or, if you want to just do, let's say you have a range, this range, and you just want to, okay, we finally souped the range right here. I want to hold to equilibrium, then the end of the range, you can. I personally, you can see the end of the range gets tagged here. It's a little bit riskier. You can do an equilibrium if you don't feel comfortable. But A to B, if you know and you're confident that this is going to get hit for whatever reason, there has to be a narrative behind the drawn liquidity, then you can take it. That's how you frame your trade setups. That's how you frame your entries. That's how you frame your exits. Price should have no further reason to continue here. If you have an SMT between these highs, we rebalance the inefficiency, we rebalance the equilibrium, we have a bearish bias, we finally swept liquidity, we did accumulation manipulation as well. And when did we sweep it? Let's say we swept it 4 a.m., 5 a.m., and then 6 a.m. you can see, boom. Not confident, you can take this, you can take this. Now, how is price respecting this level right here? It's respecting it beautifully. You can look at the body as well. What is this, a breaker? Boom, boom. And we're continuing lower. You could take the inversion here if you're not confident. You could take the liquidity sweep here if you're not confident. You could take the fair value gap that formed here if you're not confident. Or you could take the order block. And that's how you frame your trade setup. Knowing that price should go here and here and here and here with the right context. If that didn't make sense or you have any further questions, just leave it down in the comments below. I'll try my best to get to them. I want to thank you guys for hitting 5K subscribers. I really appreciate it, and I'm going to try and be more consistent. Life got really busy, so I had to do a few things. But if you also have any other video ideas, make sure to leave them down in the comments below. Thank you.